Alright, welcome to a global macro update. In this video, we're going to be looking at two specific metals, palladium and platinum. We always look at gold and silver, we trade them, but this is two metals that are a little less common in the trading realm, as well as just a general understanding of what they are and what they're primarily used for. So we're going to quickly look at these four metals, gold, silver, palladium and platinum, quickly looking over the use case as well as some potential supply risks that are involved in these different metals. So first things, we're going to look at some kind of rankings, I guess you could call it, for these metals, and we see that there are some certain specifications that we are looking for. We're going to look at relative supply risk, the recycling rate, the ability to substitute that metal with another metal, and then also the production concentration, reserve distribution, political stability of top producer, and political stability of the reserve holder. So we're going to get into this right now. Let's quickly look at gold. All right, so these are the criteria right here. So relative supply risk, it is a 5.7 on gold. And what is relative supply risk? It is an integrated supply risk index from 1 being very low to 10 being a very high risk of relative supply. Like a supply shock, meaning if you have a supply shock, if the demand continues or goes up, there's going to be a massive parabolic move because everyone's going to be looking for something that they can't receive, and they'll bid up the next guy in order to receive that asset. So these supply shocks could create a parabolic move to the upside if it does come into fruition. Recycling rate is a percentage of a commodity which is recycled. It's over 30% for gold. The ability to substitute gold, it says, is unknown, although we will look at other metals and see the ability to substitute one metal for another. Production concentration is a 13, so it's not too at risk in terms of gold. And then reserve distribution is at 15, which is also very low. Now let's look at silver. The relative supply risk is a little bit higher at 6.2, so that means there could be a potential reduction in supply, which would then create a kind of bidding war to receive that asset. So there's a higher probability of a supply shock coming into the market of silver. The recycling rate is yet again over 30, just like gold. The ability to substitute one metal for another in terms of silver is low, meaning that you are able to substitute another metal for silver with no real economic or performance impact. What you're looking for in an asset that you're looking to invest long in my opinion, is the ability to not really replicate or replace a certain asset. For example, when we look into the later metals, we'll talk about that. So the production concentration is 19, so it's not too high. And then the reserve distribution is 23, which isn't that bad either. So gold and silver are relatively low on the risk for a supply shock, in my personal belief. Silver is a little bit higher in the potential for a supply shock, but they're both relatively stable when comparing them to palladium and platinum. So first thing, what are these metals used for? Well, we know that gold is mainly used for jewelry, electrical, and mainly bullion or some sort of safe haven, store of value investment. Silver is an industrial metal, but it's also used as a safe haven and a store of value. What is palladium used for? Well, mainly over 55% of the palladium supply is going into catalytic converters, and basically the use of CO2 emissions reduction in cars, trucks, and other vehicles. That's mainly what palladium is used for. Over 50% of that metal is used in that purpose. You got 10% in jewelry, 10% in dental and other medical uses, and then a little bit in investments. So we can see the large majority of it is going to be in cars. So we're going to look at some sales for cars, trucks, in some parts of the world. Now let's look at the relative supply risk for palladium. So, like we said, 1 is very low and 10 is very high in terms of the risk for a supply shock, and palladium is at a 7.6, meaning that it's pretty high in terms of a potential for a supply shock. The recycling rate is above 30, so same as silver and gold. But what's different is the ability to substitute a different metal for palladium is very, very high, meaning there's no real substitution for palladium. So if you don't have it, you need to buy it. You can't buy copper, you can't buy another metal to substitute for palladium. So that definitely tells you that if there is a shock in supply, if there's a reduction in supply, the demand will still continue to come into that metal. And then the population concentration at 60 is a little bit high. The higher the value, the larger risk there is for there to be a risk in supply. And the reserve distribution is at 95, which is very high. The higher the value, the larger risk there is to supply. So we know that palladium has a very, very high risk to supply, and we can see that in the chart. And then platinum is a little less. Not much actually. It's pretty much the same. 7.6. This might be the same photograph, maybe not, but this is looking like exactly the same number. But platinum is very similar. Let's just quickly look at this right here. I just want to make sure that we are getting the same thing to platinum. Let's look at platinum. All right, so we go to the periodic table right here, and then let's look for platinum, which is this guy right here. And then we can go to supply risk, and then we can see, yep, it is the same as palladium. Okay, cool. I just wanted to make sure. So that's how we get it. We go to the periodic table, and then we find the risk, the supply risk, sorry, and that's how we get our information. And we have copper, we're not going to talk about that. So we understand that there is a higher risk of a supply shock in palladium and platinum, meaning that if there is a sudden surge in demand, there's going to be a huge move to the upside because people still need the metal. They can't substitute it very easily like they can in, for example, copper, which has a very low rate that you can actually substitute it, meaning it's very easily replaceable to some degree. So now that we have an understanding of what platinum and palladium are used for, mainly in catalytic converters, palladium is in gas catalytic converters, whereas platinum is in diesel catalytic converters. Those are going to be the two differences. And then platinum is also a little bit used as jewelry, whereas palladium is not really used as jewelry. So those are going to be the differences. And that's your overall top kind of analysis of these two metals. So now we're going to get into understanding the potential demand for both palladium and platinum, but just overall the demand for these catalytic converters, because at the end of the day, if the majority of the demand is from catalytic converters, from vehicle sales and vehicle production, that is where our prime focus is going to be located. If, you know, obviously if the demand comes over 50% of a certain asset. So now we're going to get into the demand that is currently for cars, trucks, and other vehicles. All right, so first let's identify where are these cars getting sold and trucks getting sold. So first things first, this is passenger car sales. So this is your normal everyday vehicle that is not used for transportation of goods and services. It's just a family normal vehicle, right? And we can see China is way surpassed any other country in terms of passenger car sales. They're at over 21 million, and the second closest country is the United States at 4.7. So huge discrepancy in the amount of cars that the first country is purchasing compared to the second country. There's not even a hope in terms of the second country outbeating China. So China is a huge player in terms of how many cars are actually being purchased. Another thing to note is the commercial vehicle sales. This is the trucks, the transportation services, and the more work-related vehicles that are being purchased. So commercial vehicle sales, we see that USA is actually outbeating China in commercial vehicle sales at 12.7, whereas China's 4.3. So we do have to understand that catalytic converters are used both in commercial vehicles as well as passenger cars and normal vehicles that are used by normal everyday individuals and families. So there are two pools here. China is a huge player in passenger cars, and America is the huge player, and China second in the commercial vehicles. So we're going to be looking at both China as well as America and seeing the truck and car sales, commercial vehicle sales, as well as the normal passenger car sales, and understanding the demand that is coming into these two sectors. So first thing, we're going to look at the China car production. So this is the amount of cars that are actually producing, and obviously this is very tangible to the palladium and platinum demand that is obviously needed to create catalytic converters in order to produce vehicles. China's car emissions, and any real first world nation has some level of car emission that requires them to have catalytic converters. And if you see car production increase, they're going to need to purchase more palladium and more platinum because they're not replaceable, really. You need that asset, you need that metal in order to produce the exhaust, in order to produce that car, in order to sell it. So we do see this is, let's say, 5 years. It dipped obviously because of the COVID event, but we are getting a pretty quick rebound in China for the car production, meaning that there is significant rebound in how fast companies and corporations in China are producing cars. So here's that massive dump that we had due to COVID, and then we are gaining back really quickly, and we're basically higher than we were back in January of 2020. So in my opinion, the car production is increasing. We had a significant fall, but now there are people and corporations and companies who are, getting the gears back up, getting the production line in place, so then there are more and more companies and corporations and cars being produced in China. Also, this is the car sales, so obviously it's very similar to the production of vehicles, but we do see the car sales are increasing as well after that significant sharp drop during the late February, kind of mid-February to March event, and then we're getting a significant bounce back where we're seeing significant increases in the purchase of cars as well as the production of cars in China. Now, it's not all great in sunshine. We do see that the heavyweight trucks in the United States obviously taking a massive move to the downside. We haven't really seen anything like this since 2007, right here before the financial crisis. So we do see that we're not even at the low of 2009, at the bottom of the financial crisis. So in terms of the United States commercial vehicle sales, it definitely looks like it is weakening, which is contradicting the Chinese numbers that we're getting right here. So definitely it's not as easy as just seeing everything go up and you're just going to be longing a particular thing. There are things that are contradicting each other, but we do see that there is a reduction in the sale of commercial vehicles in the United States, while there is an increase in the production of vehicles and the sale of vehicles in China, which sort of makes sense. China got the virus early. They acted very aggressively, very quickly, and their economy most likely will get back on its feet a lot quicker compared to America, which doesn't make sense. All right, now this I think is a really important chart, but I think what's even more important is this. This is going to show you on a chart the deficit of the supply of palladium since 2011, and we can see why is the supply so tight, and we can see it's even outbeating gold. And let's just quickly read about this. Why is palladium getting more expensive? Supply hasn't responded to growing demand. Usage is increasing as governments, especially China, tighten regulations to crack down on pollution from vehicles, forcing automakers to increase the amount of precious metals they use. In Europe, consumers bought fewer diesel cars, which mostly uses platinum, and instead choosing gasoline-powered vehicles, which uses palladium. So question for you, wherever you are living, what do you see more often? Do you see diesel or do you see gas-powered vehicles? I personally rarely see any diesel vehicles other than big trucks and some Volkswagens. I mainly only see gas-powered vehicles or hear them because obviously diesels are a lot louder. And in Canada, you don't see that many diesels compared to gas-powered vehicles, which is more bullish for palladium and less bullish for platinum. All right, so why is the supply so tight in the first place? Palladium's status as a byproduct to platinum or nickel mining means output tends to lag price behind. So there's not many miners that are strictly for palladium. It's mostly a byproduct for platinum or nickel miners. In fact, the amount produced is projected to fall short of demand for an 8th straight year in 2019. That's helped drive prices to successive records. So we can see this is that chart that we're talking about, and this is the projected the projected supply is to fall short of demand for 8 straight years. So this is showing you the amount of supply demand basically, and we can see it's in negative, meaning that there is more demand than supply for the past 10 years, basically, 9 years, 10 years. So we can see that in simple terms, there is a reduction in supply. There's not enough supply for the amount of demand that is coming in the market, and that's why there is so much price appreciation. All right. That's all we're going to look at for the more fundamental side of things. We will talk about one other thing, but let's now go into the charts. We got 2 charts. This is palladium right here, and we can go into the large time frames. Let's look at the monthly and then take everything off, and we can see just how much of a parabolic bull run that palladium has been in. You know, we've been at a low here since the 2000s. We got that massive move back in the 2000s, coming up from $100 to $1,000, unbelievable move. And then we got a correction all the way back down to the lows, and then we slowly grinded up here, creating a nice base. And then once we broke that high of $1,000, we skyrocketed over 160% to 2,800, and now we're coming back and kind of consolidating here, which it looks like some level of a normal correction after the huge dump we had due to the COVID liquidation event. So this is the large time frame all the way dating back from 1981. We can see that there's some major price appreciations. If we do the log chart, we can see that it is still growing pretty aggressively and somewhat healthy, where it doesn't look like there's just a massive parabolic move. It does look pretty healthy in terms of the trajectory of this metal. So now that we understand palladium, let's now look at platinum, which is right here. And let's go to the log. And platinum has been less bullish overall due to the fact that obviously diesel cars are less common on the road, and we already talked about the supply reduction of palladium and that deficit that is currently within the market, where there's not enough supply to feed the demand. So you're getting these huge price appreciation in palladium. But in terms of platinum, it's looking pretty good. In my opinion, let's just get our snip and then see what we could understand here within the structure of the market. So we can see there are 2 major contractions in volatility, in my personal belief. This one was the first contraction in volatility, and we see another contraction in volatility right here. This was a symmetrical triangle where you have major levels of resistance push the price lower, and then you have major levels of support push the price higher, squeezing the price into a apex, which is right here. Price broke to the upside, retested perfectly, and then had its massive expansionary phase in volatility. That is somewhat exactly what we're looking for in these major metal moves. Is yes, we could look at smaller swing trades or even day trades. I wouldn't really recommend day trading these, but swing trades, no problem. But we're looking for those major expansions in volatility, and I think that we are experiencing that right now in the markets, where platinum is contracting in volatility, so it's squeezing tighter and tighter and tighter. And that's really good, because in time, I think we will see a move to the upside. So let's take this off right now. We got that little wedge that broke, and then we got that large triangle that broke to the upside. I personally think, in terms of platinum, let's talk about platinum first, we'll see quite the consolidation before we're going to make another move up. And we'll talk about the palladium to platinum ratio, which is the lowest it's ever, or highest it's ever been, I guess lowest if you're doing it the opposite way. But let's quickly look at some things here that we currently see within the market. So let's just take off this and then see what we can identify. So in my opinion, what does this look like? We see a massive move to the upside, same thing here, massive expansion in volatility, right? That is what we're looking for. And then we see a large double bottom. In my opinion, this is a double bottom, and then you get a little bit of a rally up. I think we could get a little bit of a rally up, but I think what's missing is this long drawn out consolidation phase right here. It's long drawn out consolidation phase, and then you get the boom to the upside. And in my opinion, we're building the base right now for our wedge, and it's looking pretty good, but I think we will see a point where we're going to get very, very tight in consolidation, and then we're going to get a move up. So platinum, in my view, is definitely something that's going to take a lot of time before I even look to enter. It's definitely years ahead before I really see any sort of bullish momentum. In my personal belief, I think we still need that nice drawn out consolidation like we saw kind of right here. So if we just go and use the I believe it's called the bar pattern at that double top, and then we see this happen right here. I think that could be something that we play into. So if we get it nice and small, something like this, that could be a possibility. So I think the consolidation still has to hold on a little bit longer. I think we are holding a nice level of support here where we see lots of wicks to the downside and the price hold above that key zone. So I think that this is going to be a major level where price could hold right around here. Let's say at, I don't exactly know where that price is. Let's say 680 is going to be the potential level of a support, kind of like we saw a support right around here or right around here. And then we may see a higher support right around here. But I think that low is in, and now we're in a consolidation phase kind of within maybe this zone right here, where we're going to see quite a bit of consolidation here. And then we'll finally break this descending zone. And once we do, like we see in the picture, I think that's when we will get our huge move to the upside. But platinum, I don't really see anything that is too interesting right now. But in terms of palladium, I definitely see something that looks interesting in my personal belief. And let's look at this from a smaller time frame, going from a top-down approach. So this is the monthly. We see obviously we're in a bullish move to the upside. We broke a major structural high at around $1,100, right around there. And we're now in a bullish breakout to the upside. Now let's look at the daily. And the daily looks a lot more clean in my personal belief of which way we're possibly going to be looking at. And let's get our snip and just talk about this a little bit more within the price action. So we see palladium is breaking out of this wedge that we broke initially out. We see, yes, we made a move to the downside. It pulled back up. This was that huge liquidation event that occurred for all asset classes. And then we went in this very tight range that was creating our descending wedge. We got a strong move to the upside that broke this wedge. And let's just go to the 6 hour to get a little better of a look of our current situation. And then take a picture yet again. And we can see it broke to the upside, indicating that there is now strength and momentum and demand to push the price out of the consolidation. And I think this is the first continuation pattern before we could get another move to the upside. A major level that I do want to see the price pass is 2,200. That would be a really good area for the price to pass. As of right now, we are in a nice wedge. So if this wedge does break to the upside, I am expecting the price to hit this around 220 zone again. And it's just a matter of if we're able to break that zone, or if we're going to resist from breaking multiple times, create some structural level of a resistance where we might get some failure to the downside if the price is unable to go above that $2,200 level. But as of right now, I currently see a nice wedge forming right here. So let's go to the 4 hour, and you can even go to the smaller time frames. But in terms of the overall structure of the market, we had a very strong squeeze right here where the price funneled into an apex where it was funneling volatility, contracting volatility, and this is our first expansionary phase in the impulse moves. And now we're getting another contraction, and I think we may get another expansion phase in terms of the volatility towards the upside. It's just a matter of if we're going to break this $2,200 level of resistance or not. But that's the overall structure that I currently see within the market. And now we're going to give you more reasons to think that palladium is in a bullish market and is more bullish than gold. So let's do some comparisons first. Let's go here, and this is the comparison of palladium versus gold. And we can see you can buy more and more gold with your palladium as time goes on. We can even go on the weekly, and we can see it's absolutely mooning here, where the price price appreciation of palladium is higher than the price appreciation of gold. We can do this with other assets as well. So we can do, instead of gold, we could do silver. And we can see that palladium is appreciating at a greater rate than silver by a substantial amount. We could even do any real asset you want. You can look at the SPX. Price appreciating compared to the SPX as well. We can even do other metals. I think there's one right here that already, let's just stick with gold because gold's the king of the precious metals. And then we can see even in palladium versus platinum, there is a huge discrepancy, and it's almost at zero if you do it the other way around. So this is palladium compared to platinum, where if it's going up, it's stronger for palladium and weaker for platinum. But let's flip this around. Let's do platinum versus palladium. So if we go like this, it's basically going to be almost at zero. It's at 0.43, and it can't go to zero. It's impossible to go to zero. So just looking at this chart right here, we can see that the comparison versus platinum and palladium is indicating that right now, platinum is extremely undervalued compared to palladium. But doesn't mean it's going to reverse. It just means that palladium is extremely bullish and gaining significant demand compared to platinum as a ratio, comparing it to previous historic averages that we've seen. So in my personal belief, I think it will still continue to the upside. This will still chug lower. And the main thing I am looking at is this chart right here, the palladium chart. I think if we are able to break and push towards the upside from this little wedge, that would be a really good opportunity to be looking for some short-term opportunities to the upside. Whereas the other precious metals are kind of consolidating, and we'll go over them at the end of the video, but I did want to illustrate the options that commodities traders and investors do have other than gold and silver. But in my opinion, in short, palladium looks a lot more bullish, whereas platinum looks pretty, not bearish, but I'm just not really wanting to touch it because there's nothing really to do. Let's just take this off. That's kind of what I'm going to be looking at for a potential opportunity. And let's just boom that out a little bit further like so. But in terms of where platinum is on the daily, we did get a pretty significant move to the upside. We are consolidating at a previous level of support right here. So that is somewhat of a good thing. But in terms of breaking major levels, I don't really want to be looking to trade until we're able to break this major descending zone right here, which could take a little bit of a long time, which makes sense to be trading palladium in my personal belief. So that's going to be the analysis for these two less known metals. We're not going to jump into gold and silver, but definitely keep an eye out for palladium. I personally think that it could see another move to the upside as long as China and really kind of the rest of the world starts to ease the lockdowns and COVID kind of goes away. Now this trade is going to be a swing trade, so we can't obviously know exactly what's going to happen in the future, but this is more of a risk on environment trade, where if you're assuming that things are going to potentially get better, this is a long for you. But if you're assuming that there's going to be a second wave, it's going to get worse, there's going to be more lockdowns, there's going to be worse economic turmoil ahead, this might not be the best trade, because if you are viewing the market in that perspective, vehicle sales will continue to drop. People will not want to spend money they don't have on a brand new vehicle. They'd rather just use a vehicle they have, and overall, it's not super bullish for palladium. So it does matter what the overall global macro kind of sentiment is going, but in terms of the charts, in terms of the relative strength that palladium has compared to gold, silver, platinum, and other precious metals, palladium is definitely chugging along, increasing in price and appreciating faster than any other real precious metal that we're going to be looking at. So now let's look at gold and silver. We already talked about palladium quite a bit, and platinum, and kind of the reasons why we think it'll either go up or down. And now let's look at some gold here. So let's go back To the 4-hour, we already talked about a potential support that was able to hold. It did poke out a little bit to the downside. So if we're looking at smaller time frames, we did see the price break this support right here, as well as the support right here for a little bit. But this is going to be a major level of demand that I'm wanting to see the price hold. I don't want to enter while the price is within the squeeze right here. So I don't want to enter anything while the price is in here. I only want to be entering when the price breaks out to the upside. That's going to be my overall perspective of the gold market. I'm bullish on it, so I'm going to be looking for longs. So I'd like to see the price break the resistance and ideally retest this zone right around here for a new level of support on a large time frame and hold that zone. That would be, for me, an indication that gold is looking pretty favorable for a long opportunity because this squeeze is coming to a close. We got that last move to the downside where the bulls were able to hold the price above this key zone, indicating there's still buyers in the market looking to enter. I'm still going to play a little bit safe by waiting for this descending trend line to close, but it still does look pretty good for a long. I'm still not giving up on it. I'm still looking for that good entry here. And the next main level of take profit and supply is around 1785 to 1800. So that's going to be the key next level of supply that we're looking for, which could provide some great risk reward parameters within this squeeze if it does play out to the upside. Silver is looking pretty good as well. I see a pretty good squeeze happening on silver, so it could be a great continuation pattern. We will talk about the gold and silver ratio after talking about silver, but we did have a little bit higher of an ascending zone like this. That broke to the downside, and then we were able to hold our horizontal level of support right around here. And now I see the current market as a consolidation sideways, where we're even making higher lows. So this is a low, higher low, higher low, higher low, higher low, and then we're making lower high. So this is a high, lower high, lower high. So right now we're squeezing the price closer together, and this is the apex, so it has to make a decision. If it moves to the upside, it's going to be pretty bullish. If it moves to the downside, I'm going to be a little bit hesitant. I don't really want to be looking to short silver just yet. I'm still looking for momentum to the upside, so that's going to be my bias. I'm not going to be really looking for shorts on gold and silver. My bias is long, so I'm going to primarily be looking at this descending zone to break, and if it does, that would be an indication that we could see a potential move to the upside. We could see it test this horizontal zone, come back and retest maybe a couple times, and then move to the upside. So that could be a possibility, but overall, I'm going to be looking for structure to break on the upside, and then I'm going to be looking to enter exposure to the long side if it does actually end up breaking the resistance right here and right here. But before that, I'm not going to be doing anything. I'm not going to be entering early because it still has not broken our main level of resistance. But why am I still so bullish on silver is because of the gold and silver ratio. Let's go to the weekly time frames. We did halt at that $100 psychological zone a little bit, but at the end of the day, the major level of support that we are looking to see the gold and silver ratio hold initially is that previous level of resistance of this major ascending wedge that had to blow off top to turn into a new level of support. That would be the ideal situation that we will want in order for us to be looking for the final take profits for silver. I think this right now in the gold and silver market is a continuation pattern where it has a contraction in volatility both for gold and silver, and then we're going to get an expansion in volatility where silver might hit 18.5, gold might hit 1800. And that is kind of the structure that I see in the precious metals market. And I'm going to be looking at some level of take profit, some level where we are going to get some consolidation when the gold and silver ratio does hit maybe 94, 93, somewhere around there. So that's going to be the overall analysis for the precious metals, the commodity sector, excluding oil really, or any real agricultural or farming goods. I mainly like to stick to the precious metals or any metals whatsoever. So thank you very much for watching. We really appreciate you taking the time to watch our videos, comment. There's some people who are really nice in the comments, so we really appreciate that. And you definitely know who you are if you hear this now. So thank you very much. We really appreciate it. We do this to provide education, provide awareness for Performante, as well as just get some information out there that some people might not know, because obviously it does take time to analyze, to research, to go over things, to even understand how mechanisms work. So that's our goal, is to try to kind of provide snippets as to how we structure our trades. Yes, it's mostly TA, but we are doing relative strength, and we are taking account to the fundamentals to some degree as well. But the large majority of our trading does come to technicals, because I do think that price action does not lie, and there are a lot of stories that are told, but price action is pretty hard to lie with. It's pretty impossible. So that's basically the video for today. We will go over another video in another day, going over the electric car or EV kind of momentum that is stirring up. And this would be very bearish for platinum and palladium, because electric vehicles do not really use palladium too much, and the majority of the demand for palladium comes from gas catalytic converters. We have to understand that. It is from jewelry, dental, investments. Yes, I agree with that. But a lot of it is from catalytic converters using gas-powered vehicles. That's palladium, is gas. And platinum is diesel. And we're seeing a lot more gas-powered vehicles than diesel. So it definitely makes sense that palladium is moving to the upside. But overall, that's going to be the bearish sentiment, is if EVs really start taking over and really trying to take a large majority of the market cap, we could see some depreciation from palladium and platinum. But with oil prices going down, I think that we could see a reduction in EV sales a little bit, because obviously with the reduction of gas prices, people might be more inclined to just keep their car instead of switching over to an EV. That might be an option. And let's just quickly go over, for the final thing, the percentage of the EV cars on the road versus the total cars on the road. So this is the percentage plug-in passenger cars on the road for different countries. We can see Norway is taking the lead by far, with over 10% of all cars on the road being a plug-in EV, which is pretty unbelievable. But really every other country other than that is really far behind. We're seeing Netherlands at 1.7, China at almost 1%, Sweden at 0.6, in USA at almost 0.5%, where California is actually at 2.1, which isn't bad. But overall, we're not seeing that huge increase over time. Well, over time we are, but in terms of that shift where we really have to worry about palladium going down due to the reduction in sales of gas-powered vehicles, I don't think we're there yet. And I think the catalyst of the oil prices going down will play into the increase in the purchases of gas-powered vehicles compared to EVs in the short term. EVs, in the end, will win 100%. I don't agree of fossil fuels, but just in terms of the trade that we are setting up, I think that in, let's say, a year or less time, I don't think we're going to have much of an impact from EV vehicles surging in sales, because of obviously people worrying about savings, people not wanting to buy brand new vehicles, people looking at gas prices, seeing a decrease, saying, okay, I don't really need to buy a new vehicle if I can just keep the one I have. I think that's going to be where we're going to be for the next little while, due to worry of COVID, worry of not being able to have enough money to pay for everyday goods and services. So definitely, I think we are in a little bit of a saving economy right now in terms of the globe. So we really do think that this could be an opportunity. So that's going to be the trade. I don't want to babble on too long. Hopefully you understood why we're looking at this. There are some contradicting information or factors that are still in play, like the vehicle sales for heavyweight trucks in the United States, but also we do see that the Chinese production of vehicles and the Chinese sale of vehicles is increasing pretty aggressively. So there are some contradicting fundamental factors that do play a part in the fundamental analysis of this potential trade. But at the end of the day, technicals, in my opinion, provide me more of a exact, more, I guess, respected or true analysis to some degree, because like kind of most things for information coming out of China, you don't exactly know. This is just somewhat, whereas obviously the Fed website is a lot more legit. So yeah, I'm not going to go on further. Hopefully you enjoyed the video. If you have any questions, drop them in the comments below. We'll be sure to answer any questions that you do have about this global macro update. It was definitely a little bit better. I am trying to incorporate some more Interesting, not as much talked about topics, I guess you could call it, like not just going into the gold and silver and gold and silver ratio, but also looking at these other precious metals that do appreciate, that do provide some unbelievable opportunities if you are able to capture them. So at the end of the day, that is going to be something I'm going to be looking at, but I don't really have any exposure to them right now. And that's going to be the end of the video. Hopefully you enjoyed it. If you have any like I said, questions, drop them in the comments. If you found this informational, educational, entertaining, it'd be great if you'd subscribe. It helps us out greatly, and we will be answering all questions. So I'll stop the recording from here, but I will answer all questions that are coming from TikTok as well as YouTube. So if you have any questions, drop them in the comments, and I'll be sure to answer them. So until then, thank you very much for watching, and until next time, have a good one, traders.